Okay, welcome back. Thank you for joining us here at Fintech Live Dubai. Time now for our next fireside chat. This is with Amberdata and the power of digital asset data. My guest is Shawn Douglas, who's co-founder and CEO of Amberdata, who are a leading provider of digital asset data and market intelligence for financial institutions. Hi, Shawn, how are you?
Doing great. Thank you for having me.
You're very, very welcome indeed. Well, we've got so much to cover off in the next 20 minutes or so, let's get the ball rolling if you don't mind. I want to really look at what the value is of high-quality digital asset data.
Today's economies are data-driven and data-powered, and to be able to manage risk and make informed investment decisions or business decisions, you either are data-driven or you're guessing. Right. So I think it really boils down to you want to make the best decisions based on the best insights as to anything that you're doing. And we do that for digital assets.
Yeah, daydreaming or guessing, that needs to be on a mug somewhere, I think. That very much rounds it up. But really, how do you find, in practical terms, it empowers financial institutions with their decision-making process?
Sure. We process, about $250 billion a day notional activity, both across centralized spot markets, derivatives markets, options venues, and then on-chain data. And then with the addition of the ETFs, I don't even know what the daily trading volume is there, but it's about $57 billion. It's flowed into ETFs over the last 2 months. So we provide a comprehensive view of all of the fundamentals, accounting, behavioral economics, and on-chain and market activity for the price discovery process across that entire spectrum.
Because traditionally, how challenging has it been to be able to process and get a view of that kind of data? Because I've already forgotten the numbers that you just said there, but they were enormous. How challenging traditionally is it to address that kind of amount of data?
It's very challenging. It's complex. It's expensive. You need to do it in a highly available, highly scalable way because people are operating with real money and building their businesses on top of the data. So you can't make a mistake. So it's very complex, and we have a very large team with deep experience in data engineering and high availability operations to power financial services, helping us to operate that for people to build their businesses on top of.
There's more detailed things I want to get into a moment, but obviously as a co-founder here, you've been there from the beginning. When you've got that kind of idea, that kind of inspiration, where did that come from? Because sometimes the best ideas, they come from nowhere. Talk me through the beginnings of all of this.
Yeah, at the very beginnings, we saw the institutional blockchains as being potentially shared infrastructure between banks and companies to be able to have transparency into a ledger and smart contracts to automate what's happening. And you fast forward 7 years later, that's largely come true with JP Morgan and HSBC and there's quite a few banks, Goldman Sachs now, and quite a few players are now embracing the enterprise blockchain. But we early on realized that it was going to be a long time before institutional blockchains were ready. So we early on pivoted and started to support public open blockchains and centralized and decentralized exchanges. But we knew that you would need data to really build businesses and to inform your decisions. So we were fortunate enough to be able to start the company, gain funding, and have been building since.
And just one final question on that sort of area about how things begun and where things have gone since, if you'll forgive me. How have you seen things change in that time from that initial idea where obviously there was interest, it's obviously been very successful. How have you seen that journey progress over those years?
Massive institutionalization. It's mind-blowing. If you think back in the early days when we first started the company, we were so early, and even today we're still so early. But in the beginning, we believed the institutions would come. Now we have, 5 or 6 major ETFs encompassing $57 billion of notional value, and every major bank and every financial services firm on the planet right now working on tokenizing different products. So it's in the beginning there was a few $1 million of trading value a day, and now, like I said, we're north of $240 billion in notional transactional value. So it's just a massive explosion. The second thing I think is from a regulatory landscape, I think in the beginning it was largely an experiment. Now there's very clear regulatory frameworks in many areas around the world. And I think people are standardizing and embracing the technology and seeing it as the next iteration of the financial fabric of how things will operate moving forward.
Well, thank you for indulging me on that, because I'm curious. I'm always fascinated with that journey about how things change from the beginning to where you are now in such a fast-moving marketplace. You mentioned ETFs, exchange-traded funds. We've got the recent launch of Bitcoin ETFs in the US. What are the key milestones for adoption in the digital asset space for those?
I think that there's a bunch of things there. One, it was, what do the ETFs do? The ETFs make it so any registered investment advisor or retail investor within their existing brokerage account can get exposure to Bitcoin. Now, what problem does that solve for them? One, they might have their assets in a account that doesn't allow them just to go to Coinbase. Two, they don't have to worry about custody of that asset, because custody is complex and you need to do it right, and it's your keys, your crypto, and ETFs solve that challenging problem. And what we've seen is a massive inflow of participation in those ETFs. Actually, it's been the most successful category of ETFs ever launched, with a biggest inflow of capital, period, full stop, bar none. So it's been a radical success. I think really Grayscale, BlackRock, Fidelity, Franklin Templeton, Galaxy have all done just great jobs. There's quite a few other ones there. I'm sorry if I missed anybody, but I think that and that's just the beginning. You're now also seeing tokenization of funds. BlackRock launched the BIDL fund. We're seeing tokenization of many things. If you think out, on the horizon, 2030. There's something like $70 trillion worth of assets that will be securitized, tokenized, and unlocked. And many of those assets are illiquid assets that can be fractionalized and then brought back to give retail investors or registered investment advisors exposure to an asset class that they might not have been able to get access to. It also massively improves the settlement process, the transparency, and the fungibility of these assets across the globe, moving from private databases in large financial institutions to open, shared public infrastructure in many cases.
You've touched on a few reasons there, but why do you feel this one has been such a success? Because, as you emphasized there, it has been incredibly successful.
Well, when gold ETF came out, I don't know the exact year off the top of my head, but it took 3 years to get the total AUM that currently is captured by the Bitcoin ETFs in just 2 months. So just on that scale, it's exponentially more successful than the gold ETFs. I think that's a simple one. And then if you look around the world, pretty much every major region is working on launching either ETFs or ETPs and following suit. And I think that will continue. So I think that's a good, I would say, watermark, if you will, just comparing it against gold.
It really does give that hope for the future as well. As you say there, I think it will continue. Absolutely. Okay, well, moving on, a bit more about Amberdata. How exactly do you really go about differentiating yourselves as a really critical infrastructure provider for the financial institutions that are entering that digital asset class?
Well, we really pioneered institutional-grade data and analytics market infrastructure for digital assets. And because of that, we've worked with some of the biggest players in TradFi as well as in digital assets. And they, really have built a relationship with us and built their businesses on top of us. It's a trusted relationship. And how we differentiate is we work very hard to provide the deepest, most granular data in a high fidelity way that people can have visibility into the price discovery process, whether that's happening on a centralized trading venue, in the spot market, in the derivatives market, in the options markets, or what's happening in, DeFi or stable coins. You could really, we can give you visibility into what's your participation, what's happening in a pool, in the protocol, et cetera. And really, there's nobody out there, full stop, that goes as deep or as broad as we do. And that's why we really are the leader in the space. We've defined the category. We're working with the other leaders in TradFi as they embrace digital assets, and the innovators in digital assets who've been kind of leading the charge. We're on the back end helping them build out their businesses. It's very expensive. It's very difficult to do. And to go as deep as we do requires just a massive investment of time, people, infrastructure, and having the data integrity to be able to deliver that data in a highly available, high fidelity way that people can trust.
Expanding on two words you used there about high fidelity data, granular data, how vital is it? Because data, information, it is the new oil, it's the new gold, it's critical. How essential is it that data is useful? And it really can help people make a difference, because you can have data and information on everything, but if it's not useful to people, it's essentially worthless. How vital is it that granular, high fidelity data is of value to the people who need to use it?
It really depends on where you sit in the financial services value chain. If you're on the front office and you're saying doing market making, well, as a market maker, you care deeply about every insert, update, delete, and in the order book, because that's a takeable price, and you need to understand what's happening in that exchange as right now as well as historically, so you can train your algorithms and programmatically act. So the high frequency, super deep data is just critically important, and it really gives them the edge to be able to operate their businesses. And in some instances, they're doing the integration themselves with various exchanges, but they use us to gain visibility across the venues that they're not market making in. Now, if you kind of go out a little bit on the spectrum of not high frequency market making, but maybe programmatic algorithmic trading, well, in probably 40-50% of on-chain and crypto market activity comes from arbitrage and programmatic trading activities. And you need to be able to understand and quantify what's happening in centralized venues in the same asset that might be trading in a decentralized venue or in different derivatives protocols. So you can capture yield and understand that. And that's fairly real time. Now, if you're a researcher, maybe you're really only looking at the end of day. You're like, hey, what were the inflows today into the Bitcoin ETF? And I'm looking at on-chain activity. I'm looking at price. I'm looking at volume. I'm looking at the derivatives market, open interests or skews, and kind of is the market in backwardation or in contango or what have you. So it really depends on your time horizon. And if you kind of walk through the value chain a little deeper, you're like, okay, I'm out of the front office. Maybe I'm in, mid office. I'm in the risk department. You're like, hey, I'm operating in the digital asset space. Maybe I'm an exchange. I need to understand velocity and flows and stable coins and variance from peg and stable coins, because at the end of the day, most of digital assets are denominated in a stable coin or priced in a stable coin. And therefore, variance in those could cause contagion risk that could propagate through the entire market. And that could be real time, that could be end of day, it could be quantifying the risk models, et cetera. And then on the back end, and in the back office side, it's really, how do I account for this? I need to pay my taxes, I need to talk to my auditors, I need to talk to my regulators, I need to make sure everybody has the same story, everybody can see the same insights. the thing about digital assets, it's very different than traditional financial services, is it's radically transparent. There's more transparency in digital assets, although it may be complex, and that's where a provider like Amberdata comes in. But that radical transparency allows you to understand what's going on. And I think that the last piece, if I go back to someone who is investing or trading or researching this space, is I think the dream of somebody who's trading equities is to be able to get a real-time P&L from Amazon and say, hey, I'd love to know how many things did Amazon sell today, or how many things did they not sell? What's their inventory? And in digital assets, we actually can tell you at a very granular level, every single transaction in and out of a pool, what was the price, what was the theoretical price, what's the inventory, what are the interest rates, what's the cost to carry. That's why it's so radically disruptive and people are embracing this, because you are able to compose these different fundamentals of finance into a way that you can create new financial products, and the visibility into the inner workings of those is available where you can't get that in traditional financial services. So that is what people are using the data for. What, kind of the time horizons that they're looking at. It could be from microseconds all the way out to the annual or over a 10-year horizon.
So many applications, and I love that level of flexibility as well. But you mentioned there about this is a disruptive platform. It's a disruptive idea. But when you've happened upon an idea or a platform that has made those kind of strides, how important is it that there is continuous improvement? It can be very easy to sit back and say, look, we've come up with something here that's breaking down boundaries, that's working for an awful lot of people. You can sit on that idea. How important is there continuous improvement to the platform and what's being offered?
Yeah, this is something that's actually really challenging for a company like ourselves or anybody in this space. Is this market is moving faster than anything I've ever seen. This is happening way faster than cloud computing happened. It's really the financialization of the internet, and there's this a Cambrian explosion of new financial products around the world, and everybody is competing to innovate. So staying abreast of what is happening and being able to identify things, perhaps not even knowing what's happening yet, but being able to apply machine learning and apply analytics and insights to identify emerging trends and activity, to be able to go, I need to look at that. What is that? Overnight there was, $150 million that flowed into this new pool. What's in there? What's going on? What's the behavior? Is it something interesting? Is it not? Right. And I think that's really, really critical to be able to stay abreast of what's happening and quantify the opportunities and risk and act on that. It all requires data and analytics and insights.
And staying at that leading edge, how challenging is that? The competition is fierce. The press releases cross my desk every day. There are so many great ideas out there, of course. How do you stay at that leading edge?
Yeah, I mean, it's not easy. It's we really invest a lot of time and have a world-class research team. And it's always looking way out on the horizon. We build the deepest analytics and insights into what's happening in the derivatives, into the DeFi space, into the tokenized assets space. For example, there's now a massive trend around tokenized assets that is starting to happen. And, so the first thing our research team did is, if you go to amberlens.com or intelligence.amberdata.com, you can see that we've built out a tokenized asset, dashboard where you can, see what's happening. Same thing with the behavioral economics of on-chain activity, with the halving. The daily production of Bitcoin has gone from about 900 Bitcoin per day to roughly 500. So, it's become 50% more scarce. And as such, there's behavioral economics that are happening. So you need to be able to see, observe, apply your hypothesis and test your thesis on how you think things are happening and the corresponding relationships. I think it's true of any business, but financial markets in particular are incredibly data hungry and we have data that is more transparent than traditional financial markets.
And finally, you were talking about emerging trends. I want to look a little bit further ahead than that. This is the crystal ball question for you, really. What's the future and the future potential of this kind of technology?
Yeah, I really think that if you fast forward to, say, 2030 or 2050, this is the new fabric for financial services. The days of a large financial services firm operating in their own little walled garden and their own database is going to evolve to operating in transparent, shared, blockchain, powered networks. I mean, if you look at Larry Fink from BlackRock, you look at NASDAQ, you look at BCG, everyone's calling massive, total addressable market. Something like $70 trillion of assets will be tokenized by 2030. And as such, I think we're very, very early today in the digital asset space. This is not my objective to be totally hyperbole here and say, oh, this is going to the moon. That's not the point at all. This is a natural evolution of a technology, just like over the last 20 years, any consulting firm has built their business around digital transformation. This is a digital transformation of the financial fabric which the world operates on. That includes payments, that includes digital rights ownership, that includes financial products. And the total addressable market on this is not the number of people in the United States. It's literally every single person in the world who has a mobile connected device will have access to these products. So this is a total paradigm shift. And if you look today, I think there's $2.5 trillion in market cap, not counting the ETFs. But if you look at derivatives, for example, in traditional financial markets, I think they trade like 14x spot, the total notional trading volume on a daily basis. Last year, we were at 3x spot. So the opportunity for growth in the derivative space is going to be massive. With derivatives, you get more sophisticated operators, you get more surgical precision in your management of risk, and you get the ability to start to create structured products to generate yield, to enable insurance, to be able to do transfers of value without spending days to transfer money. You can do it instantaneously, and it's just a radical transformation that's really going to touch so many facets of our lives. We're focused on institutions and helping businesses adopt digital assets and to embrace and empower their movement into this, paradigm shift. But this will touch every single person on the planet.
Absolutely. And Shawn, I think if we did this again in 10 years' time and look back on this conversation, I really do not think you would be far wrong. Shawn, thank you so much for joining us today. It's been an absolute pleasure. Been very generous with your time. Thank you so much for joining us.
Thank you. My pleasure.
Thank you.